Well, we've got plenty of numbers that are coming in thick and fast, and one of those numbers that looked absolutely rocking was actually Welspun Corp. The company reported a solid set of earnings in the September quarter. Revenues are up more than 30%, profitability jumped up more than 50%. And to help us with the past quarter and the way ahead, we're joined by Mr. Vipul Mathur, the MD and CEO at Welspun Corp. Hi, Mr. Mathur. Good morning. Thanks a lot for coming down to the studio.
Good morning, Nigel.
Well, congratulations on a good showing, with regard to your numbers. But my question is with regard to your guidance. Why are you being so conservative? As per your reported numbers at the half-year mark, you're around 1,200 crores. And for the year, you're guiding for around 2,200 crores. If I go past all the, the last many years, second half is much better than first half. So realistically, should it be actually 2,500 crores of EBITDA for this year itself?
So, Nigel, first half has been good. Yes. Second half looks extremely promising. Got it. It is going to be a strong performance coming up in Q3 and Q4. I think so. The reason we are slightly conservative in terms of guidance, that do I have a worry that we will not exceed it? No, I don't think so. We will definitely be exceeding that. But the reason we have always been slightly conservative is because, see, there are a lot many variables into play. Delivery at the customer side, payments, this, that, all the, there's quite a few things which are out there. So which holds us back slightly in terms of overcommitting. See, we always believe in committing and performing and delivering.
So you are comfortable of beating that guidance. You're sure about that, but you don't want to just immediately promise the street because you believe that there could be some unforeseen circumstances. X of that unforeseen circumstances, which none of us know about, going by purely the historic run rate, etc., 2,500 crores should be possible, right?
I don't want to put a number to that, but definitely we would definitely be beating the estimate. There's no doubt about that.
Okay, all right. Let's focus then on, the thought process. Because suddenly Welspun Corp, I remember a few years ago, there was a big debt in books, business wasn't picking up, single trick pony, dependent only on the US business. Now what's happened is the US business is firing. And then you have support from Saudi as well as from India. My question is on the capex. What 5,000-6,000 crores of capex, majority of it is in the US as well as in Saudi. Tell us about demand trends. And once this capacity comes on stream, do you believe demand is very, very strong? And if you could put in, a number, are return ratios better in the US and Saudi in comparison to what you have done in the past?
So, Nigel, we did a sort of a strategic exercise a couple of years back, and we clearly came up with a theme that we will be investing monies into core products and core geographies. For us, core product is pipe. Core geographies are India, Saudi Arabia, and US.
Yes.
I think so that decision which we took around 3 years back, we are absolutely walking the talk onto that. And accordingly, we have made the investments in Saudi as well as US. And now you see the things turning around. One thing is very clear that the industry is in a different mode altogether at this point in time. At one point in time, everyone was saying energy, fuel, fossil fuel is history. That's not the case anymore. You see any report which is coming out from Exxon, Chevron to Totals of the world, they're all saying, at least for our lifetime, the fossil fuels are going to be there.
And Trump is saying drill, baby, drill.
And Trump, in any case, is saying he is further accelerating the whole process. So we are at the right place at the right time, and with the right credibility and the right sort of situation. We are one of the largest players in America at this point in time, almost having a 30% market share. So who will invest other than us? So that's the leverage we are taking. And I think so that investments, what we have done, either in Saudi or in US, I think so, and as they will come on to stream, one will come up in FY26, the other will come up largely around FY27. For the next 2 years, when these two businesses will come on stream, you will see a sort of an exponential growth coming in there.
And do you give us a sense on what that exponential growth implies in terms of quantifiable targets?
Yeah, and return ratios, how is it better compared to what you have done in the past?
At the end of the day, everything will boil down to, let's say, what is the EBITDA margins we are making, right? What is the sort of a growth we are showing, and what is the ROCE we are delivering?
All those are the targets that we are asking you.
So we have already been very clear about that we are targeting a ROCE of more than 20%. Right now, if you look at it, we are already around 22%. Yep. Once these two things will start coming up, they are only going to improve from there.
Right. Okay. So ROCE moves up further from here, right?
Absolutely.
All right. The new buzzword is data center. And it seems indirectly, suddenly there is some exposure for Welspun Corp. Because one of the large clients, they are going to be setting up capacity, which ultimately will require some of what you produce. So tell us, how big is this data center opportunity for Welspun Corp in the United States? Because the last client gave you a big order, and that was in the direction of data center itself.
So there is a sort of a paradigm shift which is happening. Earlier, what was happening? People were drilling in the Permian. They were exporting all the gas to the Gulf Coast, and that was being, that LNG was being shipped all over the world. I think so. The way data centers are coming up, they have a massive power requirement. Now, the power requirement could have been handled through the grid. They have the grid connectivity and the grid stability in the US is falling short of expectation at this point in time. So, and data centers are absolutely energy hungry, assets. So what they are trying to do, they are trying to power themselves on their own. So they are setting up a captive power plant beside the data center, and those power plants are now being fueled by the gas.
And to transport the gas, they require
for transport the gas, these midstream companies are putting up this pipeline. So earlier, these midstream companies were all going towards the Gulf Coast. Now these midstream companies are going towards the Gulf Coast as well as to the data center.
Okay, what is the
total addressable market here?
See, early days, but the fact remains, more than the addressable market, what we need to see is that the type of players which are coming into play. The types of Metas and of all those people, that the high quality asset people are coming into the data centers, and they are setting up massive, they were doing a massive investments. So we are a part of a value chain. Earlier, data centers was data centers versus chips. Now you are a part of the value chain, is a pipeline. So we are now sitting into that particular value chain.
Got that. So, we'll get to that opportunity as and when we start seeing that in the numbers and orders, etc. Finally, a couple of questions from an India standpoint. One is Syntex, 650 crore, just wanted to know what is the path to break even here and what's the scalability here. And the second one is on Welspun specialty, business. You had said that you incubated it, turned it into a black from red. They at some point, merge it with you. So on Syntex, profitability and Welspun.
So on Syntex, see, as I have always said, it's a work in progress at Syntex. It's fundamentally a very, very strong brand. It's a pan-India brand. Today, you go on street and you ask anyone, Syntex, it's a national iconic brand. You see, it is taking its own time. There's no doubt about it. I wish it could have been a little better. But, there have been challenges into the industry. We have seen some sort of infrastructure, capex, money flowing from the government into the water sector, into infrastructure over the last 1 or 2 quarters have gone slow, which I believe that should be okay now. Once that happens, the things will change at Syntex. More importantly, I think so what we are trying to do is we are creating a very, very strong base out there. So we are not, it's a long haul. We are seeing, we don't want to expedite things, recklessly. We want to do everything which is absolutely correct in terms of, let's say, who are my dealers, who are my distributors, who are my influencers. All those stuff, all these cleanup and hygiene factors are currently going on. So
basically, Syntex is still in that growing mode. Don't expect exponential growth in the near term. You're building the blocks. So we got that out of the way. What about Welspun Specialty? Will you look to fold it in? That business has turned around. You'll have taken a larger chunk as well. Very quickly, sir.
So Welspun Specialty is not, we do not intend to do that at this point in time. We want to incubate it. I think so there's a huge potential in that company.
Yes.
And I'm very, very sure that in quarters to come, you will see a sort of a significant growth into that.
All right, Mr. Mathur, always a pleasure talking to you, sir. You're sounding optimistic about business, and we'll track you to some of these numbers. But wish you well, and we look forward to chatting up at the end of the next quarter.
Thank you. Coming in quarters to come, we'll obviously have you join us every quarter and then detail where the growth.
It's always a pleasure, man.
And the street likes what you have said. I think the stock, has recovered from the day's low. It's currently moved to the high point of the day as we speak. Take a break, come back. The management of Hindalco is waiting for